Welcome back to Alpha Recap. Brittany here, and we're walking through the market highlights from the holiday shortened session. As always, if you have questions, you can reach us at stockalpha.ai. Let's dive in.
Thanks for having me. Lots of interesting moves to unpack from a thin pre-holiday tape.
Quick roadmap. 3 stories set the tone. A legal solicitation around Nike that popped up in PR channels, heavy volume into the holiday for Nvidia, and a reminder about concentration risk from Recurve Capital calling out Carvana. Sound right?
Yeah, absolutely. Those 3 really capture headline risk, liquidity effects, and portfolio concentration all in one go.
Okay, start with Nvidia. There was a notable slide into the long weekend, and the volume looked big. Walk us through why that matters.
Sure. Nvidia slipped into the holiday, down about 1.4% to roughly $195. The thing that flagged analysts was the size of the volume. About 134 million shares traded heading into the break. When you see heavy volume without any fresh company news, it often signals positioning shifts, people adjusting exposure or option-related activity. And that can amplify gaps when markets reopened.
So, what really stands out here is the combination of thin liquidity and big volume, right?
Exactly. Holiday-thinned markets compress the news window and widen the pricing gap between events and discovery. If implied volatility in options jumped into the break, you can get larger opening gaps the next trading day, either follow-through or a sharp mean reversion.
And we should mention American Airlines also showed elevated volume, right?
Yes, American Airlines was down about 1.25% to around $18 on roughly 130 million shares. Again, no clear macro catalyst. That suggests flow-driven moves rather than a company-specific shock. Right.
There were also notable ETF and leveraged product flows. BITO and one of those small-cap inverse plays saw big volumes.
Correct. The Bitcoin Futures ETF rose about 2.5% to roughly $8.30 on heavy turnover. And that small-cap leveraged product was up about 2% to roughly $4. Those volume spikes indicate traders were actively adjusting exposure to volatility and small-cap risk ahead of the break.
So, what should listeners take away about pre-holiday volume?
2 practical points. First, heavy pre-holiday volume can magnify gaps when regular liquidity returns. Second, options and liquidity dynamics matter more than usual. Watch implied volatility and opening ranges on reopen.
Got it. Now, shifting gears. Nike. A PR solicitation popped up that could raise legal and headline risk. Explain what that was and why analysts are paying attention.
A PR notice surfaced soliciting shareholder contacts over alleged insider fiduciary breaches. It highlights potential contingent fee representation and could accelerate filings. Analysts note that solicitation notices themselves don't always signal a case's strength, but they do create headline risk and can lead to sustained volatility until filings clarify scope and damages.
Sounds like the typical pattern. Notice, potential filing, sustained uncertainty.
Exactly. Legal notices compress the timeline between announcement and market reaction. Until there's a formal complaint or a company statement, the uncertainty can linger and affect the stock and any ETFs or funds with concentrated exposure.
Honestly, I was a bit surprised by this one.
Yeah, that tracks.
And there's a related enforcement story in Brazil that analysts flagged. Briefly connect that.
Brazilian authorities targeted suspects previously sanctioned by the U.S. over alleged organized crime links. That raises country risk for Brazil exposures, and portfolio managers holding Brazilian equities or credit should consider heightened near-term political and sanction uncertainty when modeling discount rates and spreads.
Okay, so both company-specific governance events and country-level enforcement can move markets.
Right, and the effects differ. Nike is governance risk for a single company. The Brazil actions can lift risk premia across a market or asset class, like emerging market funds or country-specific ETFs. Moving to concentration and fund performance. Recurve Capital called out Carvana as the main drag in its June update. The car retailer fell about 10% in June and was down about 22% year-to-date through June 30th. And Recurve said Carvana accounted for nearly 80% of the fund's underperformance.
80%? That's dramatic.
It is. It's a textbook example of single stock concentration risk in active portfolios. Managers should stress test position sizing because one name can materially affect returns.
Right. And the other thing is capital allocation differences popped up. Phoenix Copper raising at a steep discount and LHV doing buybacks.
Exactly. Phoenix Copper proposed a roughly £2.3 million placing at about a 54.5% discount, which signals urgent capital needs and immediate dilution for existing holders. By contrast, LHV repurchased a bit over 100,000 shares on Nasdaq Tallinn at around €3.35. Buybacks versus emergency equity issuance. That contrast highlights the bifurcation between firms tightening floats and those scrambling for liquidity.
I mean, when you step back and look at this, it's a liquidity and credit story at small caps.
Yes, smaller companies can surface balance sheet stress through deeply discounted placings, while others, with stronger cash or access to capital, can support per-share metrics via buybacks.
Quick aside, some analyst actions stood out. JP Morgan started coverage of a name with an overweight, which can re-rate a stock when it attracts flows.
Right. New coverage is a catalyst. Coverage can attract buy-side attention. Analysts note that coverage-driven flow is the opposite of litigation-driven flow in terms of how sentiment shifts.
Let's hit consumer and brand headlines. Disney hit a milestone, and Monster and Amazon had event-linked moves. What does that tell us?
Disney welcomed its 1 billionth guest and marked 7 decades. Big brand momentum supporting park recovery narratives. Monster confirmed a sponsorship roster for the X Games in Chiba, and Amazon is the exclusive distributor for a revived sports history title around the July 4th anniversary. Small activation items like exclusive bundles, Costco listing an Insta360 Luna Ultra bundle, are micro-signals about sell-through and accessory attach that can matter when aggregated across retail.
Small PRs adding up to a bigger theme: travel and hardware cycles.
Exactly. Individually, they're not market-moving, but they feed into macro narratives.
Quick hits recap. Let's run through the headline numbers so listeners have them in mind.
Nvidia was down about 1.4% to roughly $195 on about 134 million shares. American Airlines was down about 1.25% to roughly $18 on about 130 million shares. The Bitcoin futures ETF rose about 2.5% to around $8.30. The small cap leveraged product was up about 2% to roughly $4. LHV repurchased about 103,000 shares at roughly €3.35. Phoenix Copper proposed a £2.3 million fundraise at about a 54% discount. And regulatory news included new herbicide proposals from the EPA that some ag chem players will be watching.
Short reactions, 2 quick ones. First, patterns emerging.
Pre-holiday positioning, magnified volumes, and headline sensitivity.
Second short one. Legal headlines. Big effect?
Yes, legal and regulatory events are prominent drivers of near-term repricing.
So, what should listeners watch when markets reopened on Monday, July 6th?
Primarily watch opening ranges and implied volatility for names that printed heavy volume pre-holiday. Nvidia, American Airlines, the Bitcoin futures ETF, and that leveraged small cap product. For Nike, monitor any formal filings, company statements, or SEC disclosures after the solicitation. For Carvana, follow Recurve updates and any analyst notes. For Phoenix Copper, final placing terms will matter. And on the Brazil story, look for official updates from Brazilian authorities or U.S. sanction offices that clarify exposures.
Got it. A few closing takeaways for our listeners?
First, thin holiday markets amplify volume signals. Expect follow-through or snapback. Second, legal and enforcement headlines can reprice names and sectors quickly. Analysts expect sustained volatility until clarity arrives. Third, concentration risk is real. One holding can drive large performance gaps in active funds. Finally, capital allocation divergence is worth watching. Buybacks versus emergency equity issuance tells you about balance sheet health.
Great summary. Quick reminder, this episode was recorded after the market close, and the moves we discussed happened during the session.
And just to be clear, our conversation is informational only. Analysts note these are market observations and not personalized advice. This isn't a recommendation to buy, sell, or hold any security.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.
Thanks. Talk to you next time.